Welcome to Econoday Unplugged. Today is Tuesday, October 30th, the day before Halloween. I am Ann Picker, Econoday's chief economist, and with me is Mark Pender in the U.S. Mark, you're having a string of Fridays. Last week was the first estimate of GDP, and this week we have the employment situation to look forward to.
Yes, well, let's talk about last Friday first. It was a very positive GDP report, but there were definitely weaknesses. The central positive was consumer spending. Overall GDP came in at 3.5% annualized rate for that quarter growth. Very solid. That followed a 4.2 in the prior quarter, and these are really outstanding rates. And consumer spending came in at a 4% rate, and this was beyond expectations, and followed a 3.8% rate in the second quarter. Can that be sustained into the holidays? Is the big question for the nation's retailers, of course. It's hard. We just had the consumer confidence report earlier this morning, and this is Tuesday morning, and it was very solid. Spending plans, we had a Gallup poll on spending plans for the holidays. This slowed a little bit, but from last year's record peak, but is still positive, and that's where the real good news is in the report. The not so good news is residential investment, and this is housing, and it declined at a 4% rate. This is the fifth decline in six quarters here. And we just had Case-Shiller this morning, which is a price index, and it's showing it's the third straight 1/10 crawling along at only 1/10 monthly gains. This is the weakest performance. Before that, it was up 0.2 and down 1/10. So this whole year has been noticeably weak for home prices, and actually the weakest for Case-Shiller, which is the most closely followed of all the home price indexes, the weakest of the expansion since early in the expansion. So residential investment, that's an odd hole to have considering the strength of the labor market. In any case, it is a negative, and barely a positive is business fixed investment. In the third quarter, this just came in on the positive side, had been soaring above the double digits or in the high single digits following the tax cut at the beginning of this year, which allowed corporations to invest in their business and their businesses. But this effect may have already faded very quickly, and if it continues to fade, could very well raise new questions on how to stimulate new business investment, tax plans, etc. That would be an interesting thing to follow. The big weakness in the quarter was net exports. They pulled down GDP substantially, and this, even though it's hard to tie any direct lines into tariff effects, food definitely was a negative in the quarter, but that's a pretty small piece of total trade. In any case, without any hard evidence, on the surface, it looks like the trade issues certainly have not helped, and there's really nothing really pointing to any improvement for the fourth quarter here. However, inventories are what is more of an abstract category, but it has a very powerful effect on GDP, and it is very favorable in the third quarter. As businesses restocked inventories that were depleted during the strength of second quarter demand. So they want the inventories. Now, whether they will continue to build the inventories is an unknown. But if you take out inventories, GDP rose only 1.4%. So it shows you how much residential investment and net exports pulled down GDP and offset the gain for consumer spending. Now let's turn to this Friday, and we have the employment report. Now this is the strength of the economy, is the labor market and demand for labor. Econoday's consensus for non-farm payroll is 190,000 gain. That would be up from 134 in September. This would be a very, very strong result. The unemployment rate is still considered to come in hold at 3.7%. And average hourly earnings are the wild card here. Their monthly gain is only expected to come in at 0.2, which is modest and won't raise any concerns of accelerating wage inflation. However, a head fake could be the year-on-year rate, which looks to go up because of an easy comparison with last year by 0.2 to a 3% rate, which would definitely take headlines. But again, the monthly improvement or the lack of improvement acceleration will, I think, take off the edge of that possible 3% reading for average hourly earnings. So what this would mean, we're going to set up now expectations for the November FOMC, and no rate action is expected at the meeting at all. Those expectations reserved entirely for the December meeting when another rate increase is expected. And unless there is an outrageously strong readings in these reports on Friday, and these whether it be non-farm payrolls, the unemployment rate falling, or monthly average hourly earnings spiking, there will be no expectations for any event to happen at the November FOMC, just for a reminder. So it looks like I think that's pretty much it. The economy on track with housing the weak link.
Thanks, Mark. Last Thursday, the ECB announced its monetary policy decision, and this week, the Eurozone is releasing a slew of economic data. Today, for example, Eurostat, the Eurozone Statistics Agency, released flashed third quarter GDP and EC economic sentiment. For the former, quarterly GDP was up only 0.2% from the second quarter and 1.7% when compared with the same quarter a year ago, the weakest performance since the third quarter of 2014. GDP was up 0.4% and 2.2% in the second quarter. It should be noted that these are not annualized data the way the U.S. data are presented. Rather, these are simply quarter over quarter and year over year. Flash third quarter GDP was also released for France and Italy today. Italy did not grow in the third quarter, but France increased its quarterly rate from 0.2% in the second quarter to 0.4% in the third. Economic sentiment also edged lower. Industrial sentiment, one of the components to a reading of 3%, 0.3 from 4.7 in September. Consumer sentiment reading was minus 2.7 after minus 2.9. Amongst the largest economies, only Spain grew, which was up a sizable 1.9 points to 107.4, while falling in Germany and falling in France and falling for Italy. Angela Merkel, on the political side, yesterday said she would not run for her party's leadership position again and would step down as chancellor at the end of her current term in office 2021. Things are still being sorted out there, and it will take a while before we know really what's going to happen. Upcoming announcements from the Bank of Japan tonight and the Bank of England on Thursday, along with this quarterly inflation report, will wrap up the week. Thank you, and we'll see you next week.